lead us on.
Okay, well, 5, 4, 3, 2, 1. It is the Daily Energy Markets podcast. It is June, not June anymore. It's July the 10th, and we are looking at a Brent crude oil price of $78 a barrel. Let's kick off this morning with our regular Monday morning quarterback, Omar Najia, Global Head of Derivatives at BB Energy. Omar, have we finally broken the grip of $75 Brent, and now this is the upward move you've been waiting for?
Well, I think so. It's if you look back to, we've been in a downtrend since March 2022, and you can look at the price back in March 2022, 130 something, over 135. And then if you draw a line straight down, you can see it's tested it 3 times. And on Friday was the 4th. And on Friday, when it breaks it with volume to the upside. So however you want to think about this market, I think if we continue to kind of hold and move sideways to up, then I think there'll be a lot of pressure for people to start covering. So this is what I was talking about before. So originally people were saying, look at China's not recovering. Russia is I don't know what, and the economy is this. So all that is rational, and markets don't work like that. They don't work on 1 + 1 = 2. So basically, what they work on is, fear and greed. So it's broken that line, and all of a sudden everybody's nervous, and they'll be told, their back officers will be told, close your position now. I don't care what you think. Do it now, buy. And the market will go up. So that's what I think is going to happen. So I'm looking for this, breakout to the upside for whatever reason, irrational, panic, you name it. But I think upside beckons here. I think it's tried very hard to break down. It hasn't managed to, and I think the upside beckons, rationally or irrationally.
Well, speaking of irrationally and rationally, let's go to Richard Udeoghli, CEO of Matrix Holdings. I couldn't resist that one.
I know you couldn't help yourself. I saw that.
You obviously have coordinated this with Omar ahead of time. Irrational exuberance seems to be back in fashion. At least if it isn't, I'll try my best to bring it back. The equity market's still thumping along, Richard, and ultimately the US economy still doing very well, creating lots of jobs. There's no reason for a downside in oil price, one would think, given the macro numbers. Despite this recession that never comes, the general macro numbers remain relatively positive. Your thoughts?
I think you're right. I think that the U.S. remains in a it's not the sweet spot, and I would be suspect of some of these employment numbers not being really exactly what they say. But again, the U.S. is doing well. Everything is kind of moving along smoothly. I think that what Omar just says is right. The market has broken higher here. A couple things I think that goes along with this is the front end of the curve now. The 1 to 12 month Brent spread now is $4. It's up almost $3 during a move, and usually we haven't been seeing that. If you've been watching the spread, the calendar spreads versus the outright price, when markets have been moving up, the calendar spreads have kind of lagged. TI has had a negative spot price relative to the next nearby. It's now turned a little positive. So I think there's a kind of a dual story going on here. Not only is the market moving higher, but the curve is strengthening a little bit. And to me, that's been one of the key factors of this going back 3 or 4 years now, or not. I shouldn't say 3 or 4 years. I bet the last few years is when the curve has remained in backwardation. But I think this is basically OPEC getting rewarded. They've said what they're going to do, and they are doing it. They're going to continue to maintain a limit on their production, and they're doing it. The U.S. has come out today and it's saying they're going to buy another 6 million barrels for the SPR. So they didn't, when it got down to $65, the government said, "Oh, we're not going to buy it." Now at $75, they're saying, well, we better get it back in there again. So at least we can say we sold oil at 95 and bought it back at 75. And so I think what the market has done is found itself in a sweet spot. The China story and demand story is probably going away. They have a 3% growth now, or whatever that number is supposed to be. So maybe what we're just looking at is a market finding its balance. And I've said this, and I'll say it again, because every time I've come on, The concern is not now. The concern is 2 and 3 years out. That's where the concern is going to be, because the investment cycle is still pointed towards transition, but now we're starting to see a change in price. And if price starts to go higher here, 75, 80, 81, it's okay. It's when it gets above those numbers that the market starts to suffer a little bit.
Well, there's one man who won't be too disappointed if that happens. Walter Simpson, Managing Director of CCED in Oman. Walter, welcome. Good morning. I was at the OPEC Plus meeting last week, speaking with the Saudi oil minister, and he was saying that this is a show me market, not tell me, i.e. the reaction to the decisions that he's made individually with the unilateral cut on Saudi Arabia, he felt would trickle through once the market feels these unilateral cuts. And we're seeing that now. Your thoughts on this upward move, the break away from 75?
So I'm with Richard on this. I think the market itself is showing strong demand side and restrictions in supply. I mean, that's pretty simple in terms of price. So I think OPEC are being rewarded for their consistency and their sticking to their restrictions. And I think we're starting to see the recovery in the economies that we've all been talking about, and that's starting to happen. And I think it looks good from an oil price perspective. You know, there's still recession hovering out there, but it's been hovering there for a long time and hasn't realised yet. So we'll see what happens on that score. But at the moment, I'm with everybody else. I think it looks positive.
And Walter, of course, you at CCD and Oman moved much of your oil, if not all of it, to China. Any downturn there? Anything other than the consistent purchasing from China?
All consistent from that side, yes.
Omar, given the sort of macro numbers here, and you've been calling this upward move for a while now, whether rational or irrational, as you say, but what gives it momentum, you think, to sort of break through the 80 and sort of test other highs?
No, I think basically it's the fact that it's unexpected, right? So if you go back a couple of weeks and there was like a survey, and like 87% or whatever it was said lower, blah, 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 blah. So that has to now change. So basically there comes so people will be holding still. They'll look at Friday and say, no, actually not much has changed. I'm just going to wait a little bit longer and see. But if basically that wait come this week and price doesn't start dipping or falling heavily, they're all going to start buying. No matter what. So I think that's what's going to basically be the impetus to the upside. The big question is this the low? So is the Brent low that we saw at $70, is that the low for a long way time to come? Or basically are we going to challenge that at some point in the future? That I don't know. But I think right now market will move higher. But I think, WTI gets to like 80 something, 85, 83, something like that.
We're just showing on the survey that we did last week on the average for the second half of the year. And it's sort of a mix between closer to 85 and closer to 80. Richard, of course, the big other factor in the room here is the continuous, given the economy still holding up relatively well after a year of significant interest rate hikes and rapid ones. The Fed has clearly signaled that they're not done yet, and we can expect more rate rises. Certainly, the market is forecasting, I think, 80+% probability of a rate hike this month. Your thoughts on the continued impact of the rate hikes? Will they finally trickle through, or should we forget about them and sort of park them on the sidelines? Whatever damage, quote unquote, they may have done to the oil markets is already bedded in.
I think you have to continue. We printed in the United States, we printed $5 trillion. So we printed $5 trillion in the last 2.5 years. Printed $5 trillion. That's the U.S. That's not the China or the other countries of the world. That money's not gone away. It's still floating around. So I think the Fed knows that, and they're going to have to continue to do that. Remember, the Inflation Reduction Act that the government passed here also is a really it's really a renewable inflation act. It's supposed to come out at $365 billion over a 5-year, 10-year period. Goldman Sachs came up with a report saying it's going to be somewhere between 1.2 and 2.2 trillion dollars of government largesse to the renewable transition sector. And so I can't believe that the Fed doesn't understand that and knows that the money printing is going to continue in one form or another. And the only way to stop that from not becoming more inflationary is to raise rates and try to tampen down the marketplace. And so we're kind of caught between. I think the energy market is really caught between these two forces. This, interest rates to stop the inflation, which is already in place, in my sense, in the world, and that the money exists, and the transition. And so where does money flow? And I think this goes back to the bigger issue of money's flowing into the transition and not into oil production. And so Omar made a very good point there. Was this the low? Is this $70? Is this the low for a long time? I think we can talk about it later on in this podcast about some other things that are happening. But I think at this point in time, the federal government in the United States is going to buy 6 million barrels of oil. I think they've used 200 million already, so they sold. So they're going to keep on buying. So there's a little floor there in the U.S.
Just go back to Richard. Just to go back to the rates point. I mean, they have or they've had the impact perhaps of capping out and reversing the move on inflation, but they don't seem to yet have had any kind of kick in the shins of economic growth and performance in the U.S. Or is that a misreading of the situation? I.e., that when will these rate rises bite? Because that core inflation number stuck at 5%.
I don't know. I find it remarkable that it hasn't had an effect yet. I think we're starting to get some, we're having wage pull inflation now, right? We've had cost push, and now we're going to start to get the wage pull. And so now wages, I think, are going to be the next factor in this equation. So maybe that's what we're going to start to see is, and the wages start be pushed higher and higher, and that puts a damper on earnings, right? And that is where we start to see some pressure. But I don't know. I don't know when it stops, but we are going to have to see the Fed continue to raise rates or keep rates high until we see some slowing in either wages or prices. Until we see job losses.
Have to come in. Walter, another big theme last week at the OPEC meeting was more production on the oil side. We had talk about Guyana up to 1.2 million barrels, the UAE again, Kuwait. We're telling everybody who would listen that they're going to add production capacity. It seems there was no limit in that sense, given the sort of climate challenge or the energy transition. Everybody that can seems to be incentivized now to spend some money in the ground. Your thought on the outlook for that for the industry going forward into the second half and into 24?
Well, certainly in this part of the world, people are investing. Look, there's been announcements this week here of exploration finds. People are investing in that, and we're investing in new production. So I think that's going to continue to happen in this part of the world for sure. Question is what the international oil companies do. We've seen a shift from their renewables investment back towards oil and gas, presumably at the push of their shareholders. If that continues, then everybody's going to be investing in it. But we're seeing record levels of hydrocarbon use at the same time. We're still predicting 2.5 million barrels a day growth this year. So if we don't keep investing in it, then we've got a real problem coming down the road, because we'll have demand that can't be met.
The other theme, Walter, I wanted to get your views on that came up last week in Vienna was the idea of more OPEC membership. There was a lot of talk about keeping this OPEC plus group together, sort of reaching out from the stage to encourage others, Azerbaijan and others who may be interested, to try and grow the OPEC plus group. I thought it was an interesting sort of, obviously, the bigger one would think, the more muscle the OPEC plus group has to impact the direction of travel. But at the same token, it strikes me that this commentary is coming at the time when OPEC Plus looks a little fractured, because inevitably Saudi Arabia and Russia are acting outside of OPEC Plus. They're acting unilaterally and independently. with Oman being a part of the OPEC Plus, does it feel as cohesive as it was, that these actions by Saudi and Russia, not inside the group, outside the group? I'm just sort of weighing that up in my head as to how cohesive this group is when the biggest members have to act unilaterally outside it.
So I've got no insight to it. I
Sure.
would love to have been in the room to hear those discussions, I must admit. But look, OPEC Plus has been very successful. And we can't get away from that.
Yeah.
You know, it's managed to keep the price up through all of the trials and tribulations that have gone on over the last few years. So it doesn't surprise me. Now is the time, really, when they look at this success track record, to be able to say that, you know, if we stick together and we do things together, we can make this work. And actually, what's really kept the oil price up is our restriction on supply and being joined up in that. So let's do more of it. That doesn't seem an unreasonable position to me.
Yeah, it certainly makes a lot of sense, and I suppose in a way it creates its own center of gravity. The more it grows, the more success it is, the more others that sit outside it may be incentivized to come inside the tent. I want to get the survey question and then give our guests the opportunity to give us their sort of 2-month outlook. Of course, we're breaking for summer this week. This is our last week of podcasts until the end of August, and I want to get the three guys to give us their sense of what they'll be watching through July and August. The question of the survey is pretty simple. What we were talking about earlier, Brent crude oil has finally broken out of the grip of $75 to the upside. Agree or disagree? Do you agree it has broken this grip where it has sat for some time? Or have we will trickle back to that? Certainly, obviously, a lot of talk bullish talk last week with OPEC and Vienna, and a lot of opportunity for the upside to be supported. Is this finally a breakaway from $75? Omar, welcome your thoughts. Besides getting a very good bronze suntan, which I know you like to do in the summertime, what will you be watching as you hopefully take a little bit of some R&R?
So basically, what I'm thinking about is how can you have that low basically on crude, and basically that says that over time you see new all-time highs, $70 it, and here we go to the upside. That's one. How can you have at the same time an equity market which is basically looks increasingly toppy, okay? And how at the same time can you have something, a risk asset, the risk asset, which is Bitcoin, look to start trending strongly to the upside, especially with that BlackRock stuff and all this kind of stuff, right? And how can you basically make all these things join up? Because usually if you have a recession, then oil dips. And if you have a recession, then Bitcoin dips. So how is it that 2 out of the 3 are going one way, looking forwards, and equities are going the other way? And the answer is, I don't know. I have no idea. But I was thinking, what about this, BRICS?
Well, maybe it's the point that Richard made, Omar, that there's just so much quantitative easing from the last decade, the last 3 or 4 years, that the liquidity, as you said, irrational or rational, this liquidity has to find a home, and it's inevitably rising all boats.
Yeah, but again, if interest rates go to 6%, 6.5%, 8%, whatever it is, then why would anybody be buying an Apple over putting your money in treasuries? I don't understand that. One is risk, one is no risk. Bitcoin is risk, but Bitcoin is bid. So what happens basically, for the first time in history, you start to see the US dollar not collapse, but weaken substantially. What if this new BRICS currency comes along, gold-backed, blah, 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 and for the first time you see basically a recession in the States, which basically starts to bring the stock market down, but then the price at which stocks are priced, be it the US dollar, becomes weak relative to other stuff. So Apple could be trading, let's say it's trading at 100, can be trading at 150.
Apple, you mean Apple stock?
Apple stock, yeah. So instead of right now, let's say it's trading at 100, it trades at 150. But in real terms, that's because of dollar weakness. Then you can see oil, boom to the upside, take out those all-time highs, 150, 200, whatever it is, and you can see Bitcoin do the same thing. So anyway, it's interesting, but I
in the
don't know.
immediate term over the summer, what would be your sort of one kind of, you think Bitcoin is the one to watch that gives you the risk on appetite is still
Yeah.
solid?
I mean, my personal point of view is by the end of, by the end of September, something like this, we're going to see the price of Bitcoin, get close to 50,000. I think basically, oil, WTI will get to like 85. There's a lot of liquidity in the market. All the stuff that they're doing on interest rates is not having an effect. So they got to drain more and more and more. And the stock markets, the problem with the stock markets is that the S&P, NASDAQ, all the rest of it, that move up is only by like 7 or 8 companies. You take them out, like the Meta, the Amazon, the Tesla as well. You take them out, and the market is not doing well at all. People are not making money on it. So
the average PE is quite expensive at 19 on the S&P 500. So it's certainly solid.
Yeah,
Richard,
and some are trading at multiples of that. Some are trading at multiples of that.
Yeah. Richard, I want to get your thoughts again, summer outlook, and get your view on the comments made by the Total CEO overnight. I mean, one of the things I'm thinking about over the summer is how big an impact the U.S. election noise will become, and where it starts to intersect with everything. But he drew attention to something I wasn't thinking of. Of course, it's a little bit further out on the curve. If the Republicans were to take back the presidency, that there's a possibility, according to the CEO of Total, which isn't exactly a liberal bastion, that the U.S. could reverse its export license on oil. That could be the big shock. I mean, I was kind of shocked he even mentioned it.
No.
Your thoughts on how out there that sort of idea would be, and other things you might be watching over the summer?
I can't believe the U.S. get rid of the exports on crude. I mean, that's illogical at the extreme, right?
But it was a Democratic government that brought it in, so perhaps.
Well, remember though, the Democratic government did it because they gave them a forever view of the ITC and the PTC, right? So that was a trade-off. That was the investment tax credit and the production tax credit, where renewable tax credits had renewed and renewed and renewed, and that was the trade-off that said, okay, we'll give you the ITC forever renewables if you allow us to export crude. So that's the reason for that. It would be totally illogical. The U.S. we cannot stop exporting light sweet crude from the Gulf Coast of the United States because we cannot refine it, and so the prices would collapse in the U.S. and it just. So I find that illogical. What I did make, or I referenced before, though, I think is right though, and they think I made some notes. I think we haven't talked about the Dutch government, Phil. Right, the Dutch government has just collapsed. They say it's for immigration, but it's also because they wanted to put 3,000 Dutch farmers out of business because they have nitrogen at their farms. Austria just said it's going to reduce its 2030 production goals. UK dropped its climate funding plan. Poland is going to wants to have a referendum on the ban on combustion engines. And I said before about the U.S. and the Reduction Act. If that's where I think it's important, forgetting what the Total CEO said, I think that's important, because if you get a Republican president and Senate, there goes the U.S. transition. The U.S. transition will stop, I believe, dead in its tracks. We will become a major push towards oil production, and I think that is, to me, the bigger thing that's going on. And I think we never really talk about. We all talk about the transition. I think what's happening in Austria, in the Netherlands, in Poland, and these other, and I think in the U.S., if you do see a change in leadership, what's going to happen to the transition there? That, to me, is really the story that we should be looking at, because the amount of money that we're not spending now for oil production, and Walter said it perfectly, they're going to spend a lot of money in the Middle East to increase oil production, because if we don't increase oil production, what happens when demand's 110, 111 million barrels a day, if it's all going towards electric cars and ammonia and those things? So I think, to me, that's what I'm looking at. I think what we should be looking at is what is happening on the political side as it relates to these governments who are finally saying enough. we've heard it. There is this nexus between immigration and the energy transition. I think is kind of coming together right now. They're kind of on the same party, believes in the same thing, right? Macron, immigration and no nuclear. It didn't work out too well for the Dutch government, as we just saw. So I think that to me is something to watch.
The intersection points interesting. Walter, last word to you. Your thoughts over the coming summer months. I mean, I would think China macro recovery must be center in your thoughts. What will you be watching through the rest of the summer?
So yeah, look, I think it's really interesting times. It's great. There's a whole amount going on, and all of it's very interesting. We're starting to see as you say, the recovery in China. If that continues, I'm encouraged by that. But the volatility in the political arena in Europe and the US can counter it. We'll see. The big PR behind renewables. Starting to see through holes in that, and what do we really do for energy supplies? And as Richard said, governments have been hanging their hat on it, are struggling a little bit in how they move forward. So I think it's fascinating, and I'm thoroughly enjoying seeing what's going on. Have I got any predictions? No, I'm not brave enough to make those predictions. But what I would point out, I'm looking at an average oil price so far this year, saying above $80, even though we've had a low of 75. Which means if that price is going to go up for the year, it's got to be the 85s or above for the remainder of the year, realistically. And so is that going to happen? Why? I'm inclined to think it might, I'm inclined to think it might.
Well, the annual cycle of the year we've always talked about this year being the year of two halves for different reasons, particularly China's recovery. But ultimately, it's always a year of two halves because the second half of the year demand has its natural cycle of strength. So you would think, at least for this year, we've seen the low.
I would think we have, and I guess I look at it from the perspective as we are addicted to hydrocarbons, and we need them for everything we do, pretty much. And for a period of time over the last 18 months, we sort of thought that maybe wasn't true, and I'm kind of thinking we're back to realizing it is.
It's certainly true in the big picture of things, but in the immediate term, we've seen China imports, as we talked a little earlier this morning, have remained quite solid through the second quarter, given the cheaper price, right? I mean, the Chinese are buying discounted Russian oil, and Brent, the global benchmark, was also reflecting a lower price. So they do like to buy on the low side. But as the price trends up over the third quarter, we could see China pull back a little bit on its imports and maybe draw down more on its inventories.
Absolutely, you could do. It's certainly one of the scenarios, and we'll see where that goes. It would make economic sense to do that, but then the question is, what's the oil price going to do next year? If you're bullish, then you want to buy it now because $85, $90 is cheap. If you're bearish, no, I'm going to hold off and see what happens next year. Ooh, that'd be a brave man that holds off.
Last comment, Walter, I wanted to get your insights on, obviously, the talk earlier about increasing production capacity, and as we were noting, right across the region, even with some cutbacks at the moment in terms of supply. But how is the industry meeting that production opportunity? We have talked in recent, last year and so forth, that the supply chain on the upstream side is a little bit challenged to meet all of this.
And it still is. Still seeing issues with the supply chain here. Still seeing delays in getting equipment because of the demand. But people are working their way through that. And definitely in this part of the world particularly, but the investment is happening. Exploration is happening, and investment in new production is going full steam ahead. And people are working around the supply chain issues that are hindering that. But definitely full steam ahead.
Full steam ahead seems to be where we will wrap up this morning, with Brent trading just a little bit down, softer, opening the week in Asia below $78 a barrel after a significant climb up last week. Let's see if it regains its mojo through the third quarter, where expectations as we go deeper into the first month of Saudi Arabia's unilateral cut of 1 million barrels a day, joined supposedly by some contribution of Russia also cutting unilaterally. nonetheless, moving into a tighter market, I think I'm going to be watching where I see the rubber meet the road on that a little bit more precisely is U.S. inventories. We've seen drawdowns in recent weeks, and I think in the bridging period until China gets its motor going again, the drawdown in U.S. inventories is a good place to watch. It's one data point over the summer that if you're a little bit distracted by holidays and other things, will give you a window as to where the market may be supported. If we see continued drawdown in U.S. inventories, you can expect that Brent will break through 80. All the best. This is Walter Simpson. Thank you so much for being with us this morning. Richard Agoglia in Omar's favorite state, California, and Omar Najee, of course, in Dubai, and hopefully getting away from the heat a little bit over the summer. Thank you guys so much. We look forward to seeing you.
Guys. Thank you.
Thank you. Have
Thank
a good
you.
have a good vacation.
You
Thank
too.
you.
All the
you.
best. Take care. Thank you.
Cheers.
Bye.
Bye.
Cheers, guys.